we do something very special at this event, the first and the only panel. And it's my really big pleasure to introduce to you 4 friends and investors. I know them for many years. You have been at the Ecosummit before. Yeah. You know what you are talking about. You have done a few investments, good ones and bad ones. This is Lucille Bonnet, Petr Mikovec, Janneke Bik, and Michael Wilshire. My first question to each one of you is, tell us about your investment strategy.
Yes, sure. Thank you very much for having me here. Jan, hello everyone. So our fund Klima is a growth equity fund. We focus on energy tech companies in Europe for 80% of the strategy, where we do lead investments and rounds of 10 plus million. 10 million is our entry ticket. And we do have also 20% of the strategy to do co-investment in North America. So as I mentioned, growth, energy tech focused, companies with strong product market fit, and yeah, not too many technology risks, I would say.
Thank you. Thank you for the friendship. I have to say that we met in 2014, first time. Since then, we've been around, and it's great to have you and what you have built. Inman Capital. We at Inman Capital believe that the way we run this planet and our businesses and our lives is really not good. I think some change has to happen. We happen to be investors, climate tech investors. We collected €500 million from 2 very generous LPs. One is a CEZ, CZ, utility based in Prague, assets in Central Europe. One is European Investment Bank. And since 2014, we are investing in climate tech startups. Our investment strategy is to pick the best teams, the best talents, best founders out there who have a big vision, big dream, have their why, they know what they are doing, and have capability to scale the business, because we are a later stage investor too. We go in around A, B round. Our ticket size would be around 10 million. We can go from 2 million, we go up to 30, and we like to co-invest. We like to create what we call constellation for success, as the challenges our startups are facing, and we all are facing, are huge, and it can't be done by one. So that's our investment strategy, to share and co-invest and support solo winners. It doesn't work. So one more time.
Okay, yeah, I think you were a little bit low in the volume. Maybe with this microphone it's working better. Okay. Janneke, tell us about your. Did we all understand, Peter? Yeah, it was good. Okay, perfect. Janneke, tell us about your investment strategy.
Yes, well, thanks for having me on the panel. And we are an early stage impact investor already for 15 years almost, based in the Netherlands. We do from pre-seed to Series A, so we're a bit earlier than my colleagues here on the right. But we do hope to get them on board in our successful company, so I will contact you later. And we invest in energy, in mobility, in food and ag, and industry. So our sweet spot, I think, is seed Series A, 1 to 3 million. Entry ticket, we can go up to 10 to 15 million.
Michael, you are more like an angel investor. Tell us about your investment strategy as an angel.
It's a slightly different strategy, actually. I'm an angel investor way back, actually, but particularly over the last 3 years or so. Before that, I was at BNEF, which we exited to Bloomberg. It used to be New Energy Finance. And since then, I've been doing a number of things, angel investing, and also working with some of those investments, one of which is Sightline Climate, for example, which is a market intelligence platform very much focused on emerging technologies and what's coming around the corner, as well as the more established technologies, tracking what's going on and how those technologies are being deployed, including projects and economics. So my preference actually is to invest in things where I can work directly with the team. I really enjoy doing that. And that's just one example where I've been doing it. There are some others as well. Yeah, in terms of what I look for, you know, it's a mixture of a team that's effective, a technology that is viable, but equally product market fit is incredibly important. And one other thing I've been doing is as part of the Creative Destruction Lab, which is a great title, which is a mentoring network. And they have a climate stream. I've been on that for 3 years. So we've been helping startups as they go through that journey and trying to figure out where the product market fit is and what types of finance to raise and at what point.
An important question that we want to discuss is what is the market environment? How do you see the market in the year 2024 in Europe from a VC point of view, Lucille? Do you see valuations going up and down and companies running out of money?
Yeah, no, I mean, last year was pretty down in terms of number of deals and overall investment in that space. So, yeah, companies are back to market this year. Last year we did only one investment, and this year we closed 2 already. To give you an idea, and no, so I think the overall, yeah, the market is there. I think you will share a few figures, but I'm pretty sure that there is enough money to be deployed. A lot of funds still need to deploy money, and indeed, a lot of companies maybe postponed a little bit their fundraising during the last year, and yeah, we'll be back, and so we will be there as well. In terms of fundraising, I don't know. We closed the fundraising in summer 2022, so we will be back hopefully next year, and hopefully the LP environment will be better than it used to be last year. So.
And Peter, do you think that the competition among VC funds is going up recently? Because I've heard and I've seen many new funds being created, first-time funds, and some of them really, really large. And the obvious question is the competition for the good startups going up by having more investors in the marketplace?
Look, I actually don't like the word competition in our context. I think the name of the game in a VC is a cooperative game, right? So again, if you look at the challenges and the problems startups are trying to solve here, and if you really mean it with 1.5 Celsius, which is probably gone now, but we need to cooperate, actually. We need to always find the right setup for the founders team, combining the best brains and best knowledge and best type of capital around the startup. So I'm happy that there are new funds being set up, and I'm looking forward to meet them and then share deal flow with them and always pick the best team out there with product market fit and help them to really grow together and look a couple of rounds forward, not just for the one round and then see what happens next. So I think we need to change the mindset a little bit, I hope, and so I don't think that it's all about competition, it's about cooperation in my view.
But sometimes it happens, Peter, that you don't get into a deal because other people are offering better terms and you are left out. How does it feel if you do not get into a deal in a company that you really like very much and you put in a lot of time during the due diligence?
I mean, in the growth space, there is more churn, as we would call it, than, I used to do also early stage. And so we do work on more deals than we actually close at the end. But I think we just have to accept this because it's just how it goes. At the end of the day, we still learn a lot, and we actually see these companies later as well. So it's not, it's gone once, but maybe not for the second time, and we'll see each other again. We don't have like a limitation in terms of how late can we invest. We just want to see the return whenever we invest of 3 to 5 times. But we'll see them again, basically. So we have to take it positively, otherwise you're disappointed too often.
Janneke, how do you see the market from your Rotterdam? No, is it Rotterdam?
No, well, it doesn't matter, the Netherlands.
Yeah, in the Netherlands. How do you see the market there, or everywhere where you are active?
Of course, there was a bit of a normalization, I would say, from very high competition, high valuation expectations, although the expectations I've heard on stage are sometimes also quite steep. But climate tech has not suffered from that so much. So there was some normalization, but you see some of the companies that came from e-commerce or more general tech coming into the climate tech space. So I think that there was some normalization, but there's also new competition. So it's still a good space to be in and start your startup in and raise money in, is my opinion.
Michael, what's your take on the market?
Well, I think in terms of the investment numbers, yes, they are down somewhat, although actually if you look back a few years, they're not down to where they were a few years ago. So it's just, more of a normalization, as you said. I think climate tech is holding up relatively well compared with other areas of VC, with the possible exception of AI. I think one of the reasons for that is people can see that there's a huge amount of money, and not just VC money, but infrastructure money that's going to be pumped into the system through a combination of regulation and people wanting to invest in the energy transition. So, all those numbers, they haven't gone away. All the demand and requirements haven't gone away. So I think that's sort of setting up climate with a good base, and that's probably why it's held up relatively well.
Mm. If we look into the future, Lucille, in which area would you like to invest in? What is missing in your portfolio? What do you think is a technology area and a market where value creation will happen for sure?
We currently have 3 blind spots in the portfolio, when we have 8 sectors we invest in, and these are energy storage, battery storage to be more precise, smart grid, and automation related to renewables. So I think these are definitely 3 areas where we are watching out and having more company on the radar. And they are all very relevant for the energy transition to happen. I just want to agree on the midterm perspective of companies accelerating the energy transition. I think it's still there. So yes, there are cycles, but I think the ecosystem will go through.
And we had many batteries company at the Ecosummit. Did you find maybe 1 or 2 that are?
Yeah, we had interesting discussions, so that's great. In the battery space, you have kind of different subsegments. When it comes to chemistry, sometimes it's a bit more earlier stage than what we would do in growth. Don't have now a name for the next investment, but definitely interesting discussions.
Yeah, it's very difficult to squeeze out names of companies that they really like, right? Because even if there's no competition, there may still be sometimes. And you, Petr, what are technology areas that get you excited, where you're doing deep dives? What is an area where you would like to make an investment in the future?
If you look at our portfolio, we have covered a lot, right? And we originally started more in energy space and traditional decentralized energy business models, and up to architect actually. So we are pretty flexible. But I believe if we really want to transit into CO2 neutral world, we need to strengthen the grids, actually, because we need to connect a lot of renewables. We need to continue on that. And without strengthening the grids, it won't really happen. Here, I think there's a lot of opportunities how to make sure that the DSOs and TCOs actually can handle all that inflow of renewables. And so we are looking deeply into this area. How can we strengthen the grids? What type of software can help us to have a better visibility to the inertia of those systems, etc., and hopefully find some business opportunity there, investment opportunity there.
Janneke?
Well, this was about the future of climate tech, and so I thought about it. And we as Shift, we try to fight climate change. We try to fight natural resource depletion and biodiversity loss. And I think over the past years, we made a huge leap as Europe, at least, in fighting climate change. If you look at the development of solar, especially, but wind, but also the attention that's there from all investors, then we're really on a good path forward. But all these changes, all these new infrastructure, they all take materials, and I think that needs our attention. So I wanted to point at circular technologies for this question, and I've saw some nice companies, aiming their technology at that, making renewable technology circular, or other materials circular. So that's what I wanted to point out here, that we need to not forget about the resource depletion that is, happening also in renewable energies.
Michael, which area is interesting you the most at the moment?
Well, several. I completely agree with batteries. I think and I do have some investments in battery companies, including, for example, Ecosummit. So there's a lot of innovation, I think, going on in batteries about energy we were presenting earlier. And there's a theme there, actually, of some of these that, not necessarily the battery technologies, but reducing complexity. I think there's an enormous amount of complexity that takes place very often when technologies are introduced. So if you can, find ways of reducing that, about energy is sort of trying to do that with battery design and testing and modeling. That's a good application, I think. Generally, the area of advanced materials, so those sort of platform technologies that create simplicity out of complexity, I find very interesting. And the other area I'd highlight is advanced materials. I think if you look at the innovations that have taken place in clean tech to date, a lot of them have been around advanced materials, everything from nanotechnologies for better electrodes through to different, Ecosummit is an example of niobium in batteries for fast charging, and there are many others. And it's an extremely important, I think, set of technologies that are necessary both to scale what we've got and also to address some of the hard-to-address problems of the future.
Which is a technology area in climate tech that you don't want to invest in because you think there is too much risk and too much hype at the moment?
Yeah, I think we started with the 8 sectors, as I mentioned. I think the sector where there was no way for us to make an investment in the growth space has been the hydrogen sector / low carbon solution so far. And I think markets are maturing. Use cases are not yet very clear. Offtake also difficult. And so just because of market maturity reasons, as of today, we're not really actively looking at that space.
You have anything that is scaring you a little bit, an area, or you are basically seeing trends and being open to anything?
Open for everything, and again, I think what we should make sure we understand that the climate change challenges are of a systemic nature, and they assume systemic approach towards solving them, right? And it's not about one technology. It's all about, it's very interlinked, the whole ecosystem here we are doing business in. So what is really important is actually really have this coalition of investors and smart brains and startups and universities to really look at the problem holistically and build co-investment teams to solve these problems. If we individually look at each of the technology from our historical experience, we will make wrong decisions. If you come together and really try to figure out what's the problem, what are the alternative solutions, what is the bottleneck to solve the problem when it comes to material, etc., for instance, and other specific technological risk, we can find a solution together and invest and create a champion for Europe, for the whole world. So I'm positive. If you speak, we can, build champions.
Janneke,
anything that doesn't attract your interest?
No, I would say we're fearless now, but there's no specific technology or technology that we would not invest in, but we will always look at, do we understand it sufficiently? Do we have the right network connections to evaluate it? And do we have enough capital to bring it to an exit? And so, hydrogen is typically difficult. Sustainable aviation fuels are typically difficult for us, so it's these high capex technologies, which for early stage VC is difficult, but and never say never. We stay opportunistic.
But you mentioned before, like very big funds, right? Like over 1 billion funds. There are now multiple funds over 1 billion, kind of just looking at hardware topics and capex heavy impact topics. So that could be a bridge for this technology at some point, if the market is ready. But yeah.
Let's not talk about getting into a company, but getting out of a company where you already invested, because I raised the topic. I think it's the topic of exits. I have the feeling we are seeing not enough exits that are big. Sometimes we see an exit that is happening too early. And how do we create these technology champions, these European champions that become maybe so strong that they can even do an IPO? Let us know your thoughts. We are also coming to an end at the panel. So this may be your final contribution on the exit market and what we have to do in order to improve it.
Do I have to start?
Yes, ladies first.
So, well, I mean, it's the M&A market in Europe is kind of could be also better for VC generally. How to improve that? I think at the end of the day, we need to make sure that we create a bigger company that kind of scale well. So it's of course a question of capital, but it's also a question of how do we grow, right? So there are more and more very large funds that needs to deploy, for example, 100 million euro tickets. So I think this is going into the right direction because the companies can scale more than they used to, be able to. These funds do not have kind of a huge market depth at the end of the day for now, but this will grow over time. So we believe that's very positive for future exits. And it doesn't have to be, an exit from, growth stage to a corporate or to an IPO. It can be like to the next stage of growth funds that are emerging. You have private equity funds that are also more and more specializing in the climate and energy space, which is giving good perspective. So at the end of the day, it's a question of somehow this kind of is there the capital relaying us afterwards? And of course there is the whole know-how question, right? So how do we scale a company? How do we organize? And the great thing is Europe starts to have a track record. So it starts to have champions, and these people are reinvesting their time into the ecosystem. So it's up to us kind of to, re-engage with them, have them share their know-how about how have you built actually your company to 200, 500 people, and get the other to the next stage.
Peter, you are the lucky man. You have been an investor in a company called Sonnen, and you exited it. You also had a few other exits already in the portfolio. How do you see the exit market, and how can you foster good exits, resulting hopefully in good returns?
Yeah, so exit happens when stars are aligned. You can't force exit. There's a lot of luck as well, right? And you better be ready, right, when it comes. But it's not like you can really force it and manage it and do it like that. There's a little bit of luck attached to it. So exits is as well about you want to have.
Is this why so many VCs have a telescope to see when the stars are aligning?
Yeah, I think that's part of the game, actually. Yes. Look, then it's all about mentality, right? The culture, right? In Europe, we tend to be great at technology. We have great universities, I guess, etc. But when it comes to taking courage to take the company to the next level, it's becoming a little bit problematic, right? So it's art to scale a company. It's not only skills, right? You can't just learn it, right? So, but as you said, there are already a couple of great examples, and we want to learn from them. So, I think, and there is a piece we can do as investors too. And let me maybe refer to a great initiative called Climate Brick. You can all Google it, climatebrick.com. 3,000 interviews done in Europe with 3,000 investors, startup founders, so policymakers, you name it. 50 of us then giving it a final touch. Ultimate guidebook for investors and startups. How can we speak the same language and raise from pre-seed up to the D round plus, right? Showing each milestone, which defining the risk profile of that moment, what needs to be in place so we can co-invest, allowing for thinking a couple of steps forward up to the exit, maybe from the exit backwards as well, and seeing the future, not only next round in front of us. So there's this initiative, climatebrick.com, check it out. My team and many other co-investors are using it when we speak with the startup founders. And we want other investors to use it too. So we make it easy for founders too. So we know what we want actually eventually. So I'm positive. It's a learning process. You can't push it too fast. But it takes a courage. And I think with this initiative like Climate Brick and other brave investors on this panel, I think we can make it happen and really support our founders to get to the next level here.
Janneke, how do you foster exits? I think it's a challenge. The earlier you invest, you are a late-stage investor, but you are more in the early stage, the longer the holding periods, right, by definition. And in your case, as an angel, you need to be really, really patient. If you go in even as one of the first investors, how can you be patient enough and foster an exit as an early-stage investor?
Be patient. That is really the right answer, and I do agree with the stars aligning. You know, it can take up to 3 years to sell a company, and you need to have that patience to. From starting to sell it. That's what I mean, the exit process. But we're longer in the companies than that. Unfortunately, it would be nice. That is a topic. But you know, we have managed to make good returns with the exits that we have made in our first funds, and others have too. And I see much more growth funds also coming to the market. So I am positive, like you are, that we're building this industry. And eventually, you know, we will have more IPOs and large size exits, and we have enough brain power and enough money power is also coming to the market. So we need maybe a little bit more patience, but we're on the right track, I believe.
Michael, this exit to Bloomberg, you experienced it. Was it a surprise? Did they one day call you and say, we want to buy you, or were you already cooperating? How did this materialize, your own exit with a new energy finance?
Well, actually, we kind of triggered it because we decided that we were either going to have some sort of liquidity event to allow some of the investors to exit if they wanted to, or we were going to sell to another company. So we actually approached a number of companies. We went through a boutique investment bank to help us with that. And that's a two-way process, so we were presenting to them and very much trying to assess fit, as I'm sure they were. And that was an extremely important criterion to us in that exit. We wanted something that all of us, including the whole team, were going to feel comfortable with. Beyond that, I've got a slightly different perspective actually on exits, which is it depends what you mean by exit. There's kind of the first exit, which is who's the next owner of the company, which can be great for the first level of investors. But there's also the ultimate exit, like where does the company end up in 5 to 10 years' time? And I think in Europe, we just don't have, we have unicorns, but we just do not have technology giants in Europe in the way in which you do in the US. And more than that, we see takeover bid after takeover bid, where companies that are successful have the potential to grow and scale beyond their current levels. They might be billion-dollar or multi-billion-dollar companies, but they're not, hundreds of billion-dollar companies. And I just think we need more patient capital, we need more patient investors, we need more patient institutions. And it's also a mindset, I think, of the entrepreneurs within those companies as to what are they trying to build. Are they trying to build a very successful business that they can sell on, or are they trying to build something that's really massive?
Okay, I think we are over time. It's time to exit this panel, and as a reward, you get a big round of applause. Thank you so much.
Thank you.